Yo, check it out, I gotta speak the truth about the hardest working small channel.
Welcome back to the Crypto Father channel. I am the Crypto Father. I'm having a bit of a rough start to the week. Yesterday I missed a video and today I'm just feeling rough today. I couldn't sleep last night. Anyway, so today's video is going to be a catch-up on yesterday's absence of the weekly crypto news roundup. I'll be going over some of the articles talking about a rate cut forecast for the US and what the Fed is planning to do, some predictions of the big banks ahead of the Fed rate cuts announcement, Monero prices, some XRP, some ADA, some Cardano, and of course the big article on China debanning cryptocurrencies, maybe, possibly. So all that in today's video, so make sure to smash up the like, subscribe to the channel, stick around till the very end so you don't miss anything. Also, do consider becoming a member on the channel. You can do that by clicking the join button on the main page of the Crypto Father channel and becoming a crypto cat or a crypto kitten. Your contributions are greatly appreciated and they help me continue to create more content on the channel. But right now, without further ado, let's get going. Let's have a quick look at the crypto market, the overall crypto market. It's at 2.669, so we've got a bit of a retracement, and you might wonder why. I wonder why. I'll tell you why in a second. The possible reasons for why. Bitcoin at 69,000. It managed to break above 70,000, but then retraced back significantly. Ethereum is below 3,700. BNB is still above 600. BNB is doing pretty well. Solana dropped to 160. Toncoin about $7, still in the green. Toncoin is doing phenomenally well. And Cardano at 43 cents. I'll be talking a little bit about the new upcoming fork for coming up for Cardano, which is a big deal. And Charles Hoskinson is all over the Twitter's platform talking about this, that, and the other, so I'll read a couple of articles on that. But so Traders Reality talked about it yesterday. The 2 billion Bitcoin short, is it real? Apparently this is what's holding back the Bitcoin from pumping above 70,000. Apparently there is a massive holdup of shorts around that level, which prevents Bitcoin from breaking above. Bitcoin spot ETFs bought more than 1.8 billion worth of Bitcoin last week, yet the price hardly moved despite the huge increase in buying. On one day last Wednesday, they bought $500 million worth of Bitcoin, but the price did not move at all. Why? One theory is that the increase in spot buying has been accompanied by an increase in short selling on fiat Bitcoin futures at CME. That suggests big money wants to buy in cheap while not moving the price, bringing official sell demand through fiat shortly while accumulating in actual spot. And the data gives it some credence, even though they only go up to June 6th, last Wednesday, showing an increase in shorts. The data shows more than 3,000 short contracts were added, translating to 15,000 Bitcoin worth $1 billion. Longs were added as well, but CME traders are now net short by about 1,000 contracts or 5,000 Bitcoin. In addition, range traders may have artificially added new supply as the price neared $72,000. But if some hedge funds are trying to milk the funding rate whereby longs pay shorts when there is more demand for longs by taking a net neutral position through longing on ETFs and shorting on CME, then there might currently be an artificial level of shorting. So this could be potentially the reason for why Bitcoin is struggling at this price level and is unable to break above $70,000. Another reason could be that JP Morgan Citigroup scrapped July rate for forecasts for the US. After a strong jobs report, JP Morgan and Citigroup scrapped their July rate cut predictions, changing expectations to rate cuts in September or December. So that could also affect people's decisions on whether to hold or sell. JP Morgan and Citigroup have thrown out their predictions for July rate cuts. Last Friday's jobs report was the catalyst for this change. Now, most sell-side economists and other professional Fed watchers expect 1 or 2 rate cuts later this year in either September or December. But so for now, we may be sitting ducks. Major banks had hopes for rate cuts. Most other banks gave up on the idea of Fed rate cuts before September weeks. if not months ago. However, recent data shows that weakness in job openings and private sector job creation has changed market expectations. Now the odds favor Fed rate cuts starting as early as September, not waiting until December. But so that should bring some positive sentiment to the market, but unfortunately doesn't seem to be the case. And it's probably due to the fact that Citigroup's July rate cut forecast was the first of 4 expected this year, which didn't solidify. Andrew Holland, of course, the bank's chief US economist, mentioned last Wednesday that this forecast depended on softer labor market data. The big day is near ahead of Wednesday's Fed rate decision. Wall Street's big banks predict rate cut dates. Wall Street's leading bank announces their forecast for the first interest rate cuts of 2024, following last week's strong employment data and in anticipation of the Fed's decision to keep interest rates constant this Wednesday. Banks' estimates of the timing and size of the first rate cuts vary. Some are expected as early as September, some are not expected until December or even 2025. Expected reductions range from 25 basis points to 100 basis points. Monero, I think, is a coin that isn't talked about anymore. Not as much as it used to be. The last person I heard talking about Monero was the late John McAfee. And I guess the reason why Monero is not being spoken of anymore as much as it used to be, well, it lost its relevancy over the years. I guess people just kind of lost interest in it. But also, the fact that it's a privacy coin rendered it basically being banned from a lot of exchanges, and so that kind of puts a damper on the whole trading idea of trading it. Monero price defies gravity ahead of the BitMart token launch. Monero price continued to defy gravity as it surged to its highest point since January 30th. It has surged by over 80% from its lowest level this year, giving it a market cap of over $3.2 billion. Monero, the biggest privacy coin in the world, was the best performing token, even though there was no major ecosystem news. Notably, the rally continued as Monero formed a golden cross pattern, which happens when the 50-day and 200-day moving averages cross over each other, which occurred right here, I guess. In most cases, this is one of the most popular bullish signs in the market. Most importantly, the token has risen above the key resistance level of $180, its highest swing in December last year. Therefore, there is a likelihood that the bull run will continue in the coming days. If it happens, it will likely surge to the next level at 200. And XRP, the coin of evil, $3 price beckons as Ripple pens deal with Georgia's central bank to revolutionize economy. Keep that in mind. XRP is in cahoots with central banks. Central banks are not the greatest. It's been said again and again because in many cases, central banks take over the smaller banks, and you know, the idea that they're trying to dictate economy and have so much power over monetary supply and monetary value is scary as hell. But despite the belief that they're being regulated, they're not. There is central banks receive special treatment, which shouldn't happen, and the fact alone that they can print money willy-nilly is very disconcerting, right? I mean, that's not how this should be. Anybody else did it, we'd be in trouble, but central banks can print money. That's the thing they do. And so XRP is working with central banks to create CBDCs. And we all know what CBDCs are and what's been said about CBDCs, and they're not great. I mean, they do give up a lot of control, all the control basically. The goal behind CBDCs is to give control over to central banks, to allow central banks to control where that specific currency is spent, who holds it, whether people get it or not, how it's spent. And basically, if we were running on CBDCs, banks would be able to control how we spend it, whether we are able to spend it to begin with, and that's not a good thing, basically, because at any moment your funds could be seized, and you might not be able to make purchases that you wanted to. If you were voting for the wrong campaign, or if you were trying to send donations, for example, to specific political campaigns, a CBDC could be programmed in a way that would not allow you to do that. And that is not how money should function, right? Coinbase proposes a new metric to accurately track blockchain and crypto adoption. No idea what that is. In a new blog post, Coinbase says that as more applications launch, tracking the adoption of blockchain ecosystem becomes difficult as traditional metrics like total transactions of daily active addresses become distorted due to spam and Sybil attacks, and exploit that involves the forging of multiple identities and peer-to-peer networks. To address these difficulties, Coinbase proposes using the H-index, which was originally created to measure the productivity of and impact of scientific publications. Coinbase says it has taken the X-index and adapted it to blockchains by tracking the number of addresses that have been on the receiving end of transactions the same number of times. The H-index originally in academia as a way to quantify the research output and impact of a researcher calculated by counting the number of publications that have been cited at least that same number of times. For example, 5 publications that have been cited 5 times each would have an H-index of 5. Our findings indicate that Ethereum and Base have the most widespread user activity of those measured, and Arbitrum and Polygon following close behind. But so the goal is, I guess, to keep track of duplicate addresses and duplicate uses of addresses in order to prevent Sybil attacks and hacks and scams. So that's not a bad thing. Whatever technology is being developed to control the scammers is a good thing. Solana and Ethereum feud escalates after Sol Foundation ousts validators. Solana Foundation has expelled a number of validator operators from its influential delegation program. This action is attributed to their involvement in executing sandwich attacks against unsuspecting network users, a form of predatory trading that undermines network integrity. The decision adds a new layer to the escalating rivalry between Solana and Ethereum, highlighting broader concerns over network governance and the ethical dimensions of validator operations. Solana to flip Ethereum and become altcoin leader in the next bull cycle, analysts say. Apparently, some analysts are upbeat, expecting not only altcoins to recover in the sessions ahead, but specifically for Solana, a top 5 coin to emerge as the leader in the next cycle. So not this cycle, but the next one. So of course, this doesn't discount the fact that Solana is supposed to do very, very well in this bull cycle, but in the next one, in 2029, it is predicted, 2030, it is predicted that Solana is going to surpass Ethereum. Now that would be very interesting, but whatever the case may be, it's good to have Solana on the radar. Keep stacking your Solana over the next 4 or 5 years because there's definitely enough hype. And I guess we'll see what's going to happen after this bull run, whether the hype around Solana is going to die out or if it's going to continue. But if Solana does you know, turn out to be a solid competitor to Ethereum, you could probably see it reach very, very nice heights, price heights. CoinDesk released an article in defense of meme coins. The only thing worse than meme coins is complaining about the financialization of memes. Meme coins are dumb. Use unserious is a waste of time. They give the impression that the crypto industry is trivial, full of speculations. Vitalik Buterin is probably right to say the whole industry would be better off if people instead focused on legit projects. However, as somebody said, the meme coin industry is... You have a better chance of making money in the meme coin industry and investing in meme coins than you do in playing the lottery. So your odds are a little bit better. And despite the fact that, you know, there's a lot of meme coins that are just junky. And I'm not talking about the obvious scams, the rug pulls. Obviously, those are just that. There is a difference between meme coins and scams and rug pulls. I mean, eventually their prediction is that a lot of the meme coins that are out there will be rug pulled eventually. Whether that will happen or not, nobody knows. But there is a clear difference between the meme coins that are announced to be meme coins but are actually scams, or flat out rug pulls straight from the beginning, like the block dags, or although that's not even a meme coin, or Pandoshis, who collect money from investors and then don't even distribute their tokens. So there is a distinction between those, and of course the meme coins that nobody hears about, or their caps are so slow that they're very slow moving. But it doesn't change the fact that they are here and that people are invested in them, and they're, you know, hopefully won't be rug pulled. Meme coins are what they are: highly speculative investment vehicles. that there appears to be a near endless amount of interest and capital to plow into them essentially proves that speculation is a use case, no matter whether you agree with the sentiment there. The thing about meme coins is that they're, I guess, you know, people like to gamble, and we go to casinos and we spend money on roulette and all that stuff. And I guess it's a similar idea with meme coins. People like to gamble, and it's a gamble. If you invest into a meme coin, as long as it's not a scam, if you invest into a meme coin, chances are that it might pump, like Doge or Pepe or Shiba Inu. And if you're lucky enough, if you in the very few who are lucky enough to be in this coin early on, then you stand to make some money. In the past, I was very adamant about, you know, saying how meme coins are the craps and are garbage. And I've since, I guess, adjusted my view on meme coins slightly. I do perceive, like I said, things like Pandoshi that are flat out scams. Scams are just scams, and they will be scams. But there's a difference between scams who basically steal people money versus meme tokens who try to achieve something, but, you know, for reasons of a lack of support or lack of, you know, the specific or relevant tweets, don't achieve stardom. Just recently I read a post, I read something about a new meme token that was tweeted about by Ariana Grande, and of course it skyrocketed. So things like that again, they fall into the game of musical chairs where money changes hands, but it is a form of gambling, something that people enjoy doing all over the world in many different shapes or form. I mean, going to a casino is no worse than, I guess, putting money into a meme coin hoping that it's going to do well. Of course, it's a longer play because you never know when a meme coin can be talked about and it can shoot to the moon and to the stars, but it is there. So moving on, here's the most talked about cryptocurrencies on social media. One is Bitcoin. The other big surprise, drumroll please, apparently the second most talked about is Island, run on Cardano. Then there is LRC, XRP, Left, MNTC, Game, BNB, Algo, and AVAX. And that concludes the very short list of the most talked crypto in the crypto world. Hackers steal funds from OKX users in a SIM swap attack. OKX, man. 2 users fell victim to an OKX SIM swap hack that involved the theft of an undisclosed sum on June 9th. The customers' funds were stolen following a deceitful SMS notification, purportedly from the exchange. So this was just a phishing scam, or I guess they call it a SIM swap attack. Be careful what you click, be careful what you connect to. There's a lot of scams, a lot of scammers post links to, you know, airdrops and this and that. And of course, the first thing you see in those links is that you need to connect your wallet. And as soon as you connect your wallet, your funds are gone. So don't connect your wallet willy-nilly to anything, you know, project promising you the stars and the moon, because those are most likely scams. Be very aware of that. Don't lose your money. It's one thing to, you know, be holding bags of a meme coin that isn't moving versus having to invested money into a scam meme coin that isn't even giving you your tokens. And Roaring Kitty is on the radar. Everybody's talking about them. I think, have you seen the most recent, I guess the fresh live by Roaring Kitty? It was kind of a disappointment, but GameStop dumps 15% as Roaring Kitty jokes about his plunging position. The positions, he showed two positions that he had, and they were worth something in the vicinity of $160 million, which is massive. But apparently GameStop shares fell $15 on a trading day to about $24. When he was showing it, the shares were about $32 or above $30, I think, and so his profit was in the vicinity of $160 million altogether. And I gotta say, the video was disappointing because there was nothing new. I think Roaring Kitty was a one-time wonder, one-hit wonder. He came on and he advertised basically GameStop, which is not even a crypto, it's a stock traded on the exchange, stock exchange. So it doesn't even fall under our crypto thing. So I don't even know why I'm talking about it. Let's skip Roaring Kitty. But for some reason, the entire crypto market and the crypto industry is looking to crypto Roaring Kitty for inspiration. And everybody, there was on his live 120,000 people were waiting for his live, and I watched his live. I mean, I skimmed through it and it was hugely disappointing. He's not entertaining at all. And honestly, I don't know why people follow him. I guess because he made waves with GameStop back in the day, but I think his time is past. And so him coming back, you know, with his tweets and all that stuff, it was very it was very anticlimactic, I think. Cardano, there's some news on Cardano, and there's a lot of green arrows, man, lots of thumbs up. Cardano dominating social media discussion because Cardano is ramping up towards the new fork. Charles Hoskinson announced that the proof-of-stake network was on the verge of the Chang hard fork. The aforementioned hard fork is shaping up to be the most significant update both for Cardano itself and the broader industry, according to Hoskinson. During the Voltaire phase of the roadmap, Cardano will implement a new governance model that will put the community in charge. Hoskinson is convinced that Cardano will have the most advanced governance system among all blockchains. His bullish post ignited strong social media engagement, with most social media users expressing bullish sentiments. However, this buzz has not translated into any meaningful gains for ADA, as always. Cardano's native token is up only a mere 0.5%, half a percent, and in the past 24 hours it remains in 11th place with a market capitalization of 15.6 billion. So that's usually the case for Cardano. And finally, China on the verge of unbanning crypto, but there is a question mark. China is close to allowing cryptocurrency ownership again, and if several recent developments are taken into account, and this could be massive. Major crypto exchanges, Bybit, reportedly resumed registration and authentication of crypto users from the country, even as the official government stance remains the same. According to one popular crypto commentator, Cyclops on X, the authoritarian country is close to allowing Bitcoin in the country again. He also made lofty claims regarding the sudden impact on the coin market, as the influencer claims a major appreciation is expected, but not by 100x. So China has had a blanket ban since 2009 on crypto, and more recently there were articles about China banning all crypto mining. So this is kind of you know, this is kind of up in the air. This tweet may just be a simple promotional tweet to push his prediction of 500 projects that apparently he looked into. But the country tolerated the development of the disruptive sector for around a decade, but the digital currency sector was never officially legal in the country. Bitcoin's allure is considerable, and it has found a way to appeal to Chinese users, who have become one of the biggest adopters of the crypto revolution. However, following the major altcoin boom in 2017, the country began to crack down against digital currencies. At first, it banned initial coin offerings, which was not a bad thing, not necessarily, because there was a lot of scams that occurred, and blacklisted certain exchanges from operating in the country. Before this action by the government, China was the dominant player in the crypto market with the largest share in Bitcoin mining. Due to the sudden antagonistic, China still has a large enthusiastic crypto community, but virtually everything they do, from using Bitcoin to NFTs to programmable public blockchains, is illegal and punishable by imprisonment. So what's coming? We're not sure, but this tweet says that apparently, with some inside news, China may be turning around its sentiment, but again, it could just be a promotional gimmick to push his 500, his review of 500 projects that apparently he reviewed. So this thing already had 344,000 views. Maybe that's something that I need to consider, just putting out FOMO like this. Anyway, that's it for today's video. Make sure to smash up the like, subscribe to the channel. If this information was informative, then do come back tomorrow. More videos from the crypto father, this guy here. In the meantime, Stay frosty, stay cool, keep your bags safe. I will see you in the next one. Peace.